Bermuda, BVI and Cayman update, kindly sponsored by Tilney, Smith and Williamson. Across the course of the next hour, we're going to bring you the latest from each jurisdiction from an expert panel. As always with PCD content, we love to hear from our audience. You're very welcome to put in the chat any questions for our panelists as we move through. There'll also be time for a quick Q&A at the end. So please do let us know what you're thinking, what you're seeing from your practice. It would be great to get your commentary and feedback. But just to open up the discussion today, before I come to each of our panelists, I'm going to come to Craig Wright, first of all, from Tilney, Smith and Williamson, to give a welcome from the sponsor of this session and just to sort of put a bit of context around their interest in these jurisdictions. Craig.
Oh, hi, David. Thanks so much, and good morning or good afternoon, wherever you're joining us from. But most importantly, welcome. And thanks to everyone at the private client dining team for coordinating and hosting today. Certainly seen a real flurry of messages and chats on LinkedIn, so I really appreciate everyone joining us. I think for many on the call, you're probably quite familiar with Tilney and separately probably also familiar with Smith and Williamson. The combined Tilney, Smith and Williamson team has a really numerous specialist areas, probably way too many to list today, but it really broadly fits into three areas. We are investment management, dealing with our global client portfolios, including the US. We are advice for personal financial planning, things like pensions advice and structuring needs. And of course, we're a tax team who actually, I have to let everyone know, won ePrivate Client Award last night for excellence in the category of private client accounting firm. So well done team, I guess. But as a combined group, we're now about 3,000 people. And for me, it sort of feels like we're pretty big, but in actual fact, I think what we're most well known for is the small stuff, like the care and attention and being able to provide to our global family clients. And well, personally, I tend not to think of the first piece of business we have with families to judge success. Rather, it's the second, it's the third, it's the generational planning that comes later as a guide to me about whether our clients like us or not. And in fact, many of our clients also partner with your companies and their relationships that have definitely gone in both directions. Personally, I have business development in my title, but I want to reassure you we're not much about selling, and instead we're more about promoting best ideas and sharing knowledge and contributing to financial services and the whole fiduciary conversation, really, which I think can certainly lead to partnering with local experts and reciprocity. Today, we're really delighted to be sponsoring the call, and there's some fantastic and well-known specialists in their field. I'll leave David to introduce you properly in a moment, but before I sign off, and we hope COVID variants willing, that we might meet you face-to-face, perhaps later in the year or at a future STEP conference where we are regular sponsors and contributors already. Certainly, we'll be in touch in the near future with a word on what Tilney, Smith and Williamson's new brand might be. Look at the colours in the feel and what it actually means. But I would also like to invite you to look us up if you're in London or Jersey anytime soon. So that's it from me. Thank you for joining us. I look forward to meeting with you. And in the meantime, please enjoy the show. And David, thanks for the moment for the sponsorship.
Perfect, Craig. Thanks very much. So first of all, just coming to look at Cayman and to unpick some of the Cayman trends, I'd like to welcome Bernadette Carey from Carey Olsen. Welcome, Bernadette.
Thanks, David. Nice to be here.
Pleasure. So as a lawyer working on wealth structuring out of Cayman, have you noticed any trends around clients modernising structures? Is there any trends around new vehicles? It'd be great to get your perspective as what's coming across your desk.
Yeah, definitely. A couple of trends, I guess, starting with the creation of new vehicles. The main thing we're really seeing lately is this trend towards simplicity of structures, which is interesting. You know, in the past, we would have predominantly seen very large families with, requiring really quite complicated structures, different layers of trusts and companies. And these days, our modern families, while still quite large, are really looking to start off with basic asset protection structures or flexible structures that can be easily managed. In some circumstances, that might just be a really basic holding company or a foundation company. But in others it can be a trust, and what people are really looking for is simplicity to start off with, flexibility to evolve as the family structure grows and gains more wealth. Regarding the modernisation of existing structures, that's been really interesting as well. Certainly, we are seeing a lot of restructuring taking place. We're helping a number of private clients who have really old structures that just aren't really fit for purpose in the modern world we're now in, for a number of reasons, really. We're seeing families with greater mobility wanting to move countries, new interests and investments, trying to adapt to new demands from society. You know, ESG in particular is one of those things, and just changes in investment mandates as well. So I think that's really interesting from a Cayman perspective in particular, because as you might recall from other discussions we've had, our client base, you know, decades ago was all very old money, very large generational wealth, and not much really changed between generations. We kept, you know, families kept the same homes for years, lived in the same countries, so it's a very different world now.
Okay, I mean, does the simplicity also help those clients in terms of dealing with other partners, like on the banking side? If you've got a very labyrinthine sort of structure chart, that doesn't assist the client in any way, does it? So is that part of the rationalization process, perhaps? It'll make their lives easier in dealing with other professional partners now that they have to also deal with.
Yeah, definitely. And that's what we're seeing, is even the relationships grow and evolve with the structure. Start off with something very simple, and then as needs change, as you know, as the structure grows, we bring in new service providers, and it's interesting to watch. It's great to be part of. The relationships are certainly much more, you know, go for a longer period of time than they used to. It's not just draft a deed and the family's gone. So that's great.
Okay, and you mentioned there the change in the client kind of demographic, if you like, and a lot is written about how the next gen of clients have different priorities. The past are more interested in ESG and sustainable investing, perhaps interested in philanthropy, maybe just a bit more reflective about the purpose of their wealth. Have you seen these trends filtering through into things you're working with clients on?
Yeah, absolutely. You know, we've always talked about the next gen and what they want and what they need, but we're definitely starting to observe a much greater consciousness, I think, on the part of the younger family members of wealthy families. And they really, the interesting thing I've observed is they're really paying much more attention to how their family generated their wealth, and, you know, thinking about the impact of their family business on a global scale. And there's some really careful thinking taking place now around how the family wealth might be used in the future. And, you know, just to give you an example, at the extreme level, we've seen adult children being very concerned about, for example, a family business that might have made all of their money in construction or property development, land development, and at the great expense of some Indigenous communities in their area. And so what the incoming generation has wanted to do is make reparations for that, and to use the family wealth to sort of make good, I guess, some of the losses that extreme wealth generation decades ago may have caused. So that's really interesting to observe, I think. And then, yes, families are definitely looking to implement more of a considered, you know, philanthropic approach to their wealth. In the past, we might have just seen families wanting to make some lump sum donations to the Red Cross or something like that, and it's not like that anymore. And particularly in the family office context, where having a really good philanthropic plan gives you a competitive advantage over others. And then in my experience, also, I can see that the charities also need to be, you know, it cuts both ways. The charities need to be showing family offices and families just what they are going to use this money for, how they're going to actually be doing good in society. So I think that's really only going to increase over the years. It's an interesting trend for sure.
And are you seeing family charters being used to kind of document if the family has this sort of ethos? Do you think that actually setting that down has an advantage because it sort of codifies the thinking, makes clear?
Yeah, no, that's a big exercise we now engage in. I think it's really important, particularly going back to the next gen we were just discussing, having them engage in preparing that family charter as well is super important, just to make sure the family's all on the same page and heading in the same direction, which can be difficult.
And in terms of that, trying to get everyone on the same page, I mean, there is well-documented increase in private wealth disputes. I mean, in this time of COVID, families have been more cooped up, or perhaps more reflecting on wealth and wealth transfer. Have you seen any trends in private wealth disputes in the recent period? Has COVID accelerated anything, changed any trajectory around?
Yeah. I mean, sadly, we are really starting to see an increase in family disputes. and particularly in the last couple of months, interestingly enough, I think maybe perhaps now restrictions are starting to loosen up. People can actually see their lawyers a bit more. A lot of thought is going into, well, how do we want, what's going to happen in the future? The obvious one we've seen is a lot of marriage breakdowns. I'm no psychologist, but as you've pointed out, that could be COVID related, a lot of time spent cooped up together. So we're advising a lot on splitting marital assets and restructuring, just to make sure that, you know, the spouses are set up separately for a new life apart from each other. I think another interesting trend we're seeing, you know, in terms of family disputes is that separation of arms of the family, who, going to what you and I were just talking about, might want to do different things with the family wealth. So we're seeing this sort of divergence in arms of the family business, and helping to split out from older structures, new arms of business. So that's been interesting to help with. And then lastly, I would say that trustees are starting to get drawn into these family disputes as well, particularly if, you know, it's that classic thing, isn't it? When you come out of situations like this, the blame game starts, and we're definitely seeing a bit of that, a bit of questions, trustees being asked questions. Did you do this when you should have? Should you have done this and you didn't do it? You know, that kind of thing. So I suspect we might see a bit of that in the future too.
Okay, and obviously you work a lot with the trust sector. I mean, alongside that kind of risk on the dispute side, what more broadly are you seeing, what challenges are you seeing the trustee and fiduciary sector facing?
Yeah, I would say two main areas really. The first is probably what you would guess, which is regulation. Trustees really don't want to be falling foul of new regulatory initiatives, and they come in thick and fast in the offshore world, and trustees, you know, they could be in danger of missing a development or missing a deadline, or even just not really grasping what's required of them under these new rules, which seem to constantly be changing. So that's you know, completely understandable. It's a headache for trustees, not because they don't, you know, they not so much having to do it, but because they want to make sure it's being done correctly. And then the second risk, I would say, is really, I could probably sum it up in one word, which is volatility. I use that in every sense of the word. So volatility of trust assets, of the economic climate, of personal relationships. You know, we're all experiencing so much change in so many different aspects of our life, and that feeds through into the private client structures that we are working with. So I do think it's quite difficult to be a trustee in this volatile world, and I have lots of sympathy for my trustee clients. And on that front, I think one last thing to say is there's a lot more, I'm seeing a lot more demands of trustees as well, you know, for more information, more accountability, more attention than we've previously seen in the past. And I think back to my early days working offshore, you know, 12, 13 years ago, the load of work on a trustee was really quite limited to making sure this generational wealth was managed, distributed properly. Now families want a lot more. You know, they want dynamic advisors, they want counsellors, they want proactive lobbyists. So it can be difficult for those trust companies that haven't quite, you know, evolved themselves, but also really exciting and rewarding for those trust companies who kind of thrive on this sort of client interaction.
And I mean, one area of innovation in the wealth sector is cryptocurrency. And when I'm talking to professionals, a lot of them are now trying to kind of understand how that then fits into their practice. I mean, first of all, I suppose it's creating wealth, but also it's creating a challenging asset class for trustees to manage in structures, for example. So how do you see crypto from your interactions with other professionals?
Well, look, crypto is definitely a huge news story here in the Cayman Islands. I think a very significant chunk of the new matters that are coming through the door for us have a crypto element to them. And in terms of the diversity of the client base, that's a really interesting thing to watch in the crypto space. It's been quite startling. We've had a real mix. You know, we can start off with the stereotypical, you know, guys and gals in their 30s who've, you know, really into that, early investors in crypto. And then we're also seeing these really young adults, you know, I call them kids because they're 20 years younger than me, but 20, you know, kids in their 20s who've been playing around on meme stocks online or something and just accidentally have become overnight millionaires. And that's fascinating. But then the other end of the spectrum, we have these, you know, we've got some clients who are retirees. They're in their 70s and have got a hobby in crypto mining. So that's quite cool to see as well. But then, in terms of the challenges, I think the fiduciary sector has really approached this new asset class with, the crypto side of things with caution, understandably so. And I think what I'm seeing is trustees with sort of dealing with two types of clients. It's the established clients who are now coming and saying, yes, we want to invest in these digital assets. How do we do it? Can you help us? And then you have the brand new cashed up clients who have made their money out of crypto and now need help to manage that money. And I think the first category, the people who want to invest now, that requires quite a lot of education. Trustees rightly are concerned about the speculative nature of the assets, about custody, liability. So it's a bit of a steep learning curve, requires careful structuring. And then the second category, the people who are the cashed up millionaires, they, in my experience, can actually be quite vulnerable. And so what we try and do in assisting them is build a team around them, help them manage their wealth, and just, get the right people around them to help them figure out this whole new world of great wealth. So it's a very interesting time, lots of new clients, lots of fascinating work. And I don't think that's going to change anytime soon.
Brilliant. Great to hear. Well, thank you, Bernadette. If you have a question for Bernadette, pop it in the chat and I will bring her back on to discuss it as we move through. But thank you for that. And I'd like to move on now to Randall Krebs from Harbour Trust in Bermuda. Welcome, Randall.
Welcome. Thank you for having me. And I must admit, I'm dressed down a little bit, and I'm ashamed to say that I'm actually in Miami on vacation. So we'll pretend there's bright sunshine behind me and beaches and all of that, but as there is in Miami, but instead you have a wall in my hotel room.
We admire your commitment, Randall, and we thank you for joining us this afternoon to give us a flavour of what's happening in Bermuda. I mean, we heard from Bernadette about structures being modernised, updated. Bermuda has some legislation in place that can assist that. Perhaps you can give us a little sense of how that might apply in the Bermuda context.
Yes, certainly. What you're likely referring to is what we excitingly call Section 47 of the Trustee Act 1975. And it's actually not new legislation. It's legislation that came into play more by accident than design. I may get into that in a moment. What it's used for is to make amendments to a trust in a situation where you want to change the beneficial or discretionary provisions of a trust and change perhaps the dispositive provisions without necessarily obtaining the consent of all of the adult beneficiaries or all of the beneficiaries in a situation where it's expedient. So that all sounds good and nice, but what it actually does is attract business to the island. So if you have a trust set up in a jurisdiction that doesn't have this legislation, pretty much anywhere else, and you need the unique provisions of Bermuda law, they migrate the trust to Bermuda. Then the Bermuda litigators make the application to the courts under Section 47 and make the various amendments to update the trust, perhaps, as Bernadette was saying, restructure beneficiaries, add charities, that sort of thing. And then often the trust continues on in Bermuda. So it's been big business for Bermuda for a number of years. As Bernadette's indicated, it's kind of picked up during the pandemic as people are looking at their structures saying, how are we going to change? How are we going to deal with this new environment? So big business.
Okay.
So a couple of examples. You may have a situation where you want to amend a trust, and these are ones that have actually gone through the courts, but you've got some grumpy old beneficiary who won't consent to anything, right? You don't need his consent using a Section 47 application. Or you may have a beneficiary in a taxing jurisdiction where if they consent, it will trigger a tax consequence for them. They don't need to consent. It merely has to be expedient in the best interests of the trust as a whole. Okay, unlike a Saunders and Vautier type of application where all the adult beneficiaries need to consent. Or maybe a situation where not all of the beneficiaries will benefit from the amendments. And again, it can be done under Section 47. So a very handy thing to have, tool to have in your toolkit if you need to make some of those renovations to the trust and make it modern or do whatever else you need to do.
Another interesting aspect of the toolkit is the Bermuda firewall legislation, which was recently updated. Perhaps you'd give us also a little sense of when that's useful, why it's useful.
Yeah, and what happened is every offshore jurisdiction has firewall legislation in place. And for the most part, we end up copying off of everybody else. So in this instance, it was Cayman. Cayman was one of the first ones out of the gate with the firewall. Everybody jumped on the bandwagon and they introduced firewall legislation. But over time, all these bright barristers were punching holes in the firewalls, and everybody was putting Band-Aids on it or sticking their finger in the dike, trying to stop it from trickling through. So what we did in 2018, 2019 is we engaged some of these bright barristers who were punching holes in the legislation and said, why don't you make ours better? And so we engaged 24 old buildings, a couple of the barristers there. And one of their barristers, Elspeth, is one of these proponents for changing the firewall legislation. She says it's confusing, it's complicated, doesn't necessarily work well. Let's change it. So what we did is change the approach to it. Now, if I might describe that for a moment, because I'm in Florida, the home of Nassau, I'm going to use the rocket analogy, and it's not mine, but I'll claim it is for the purposes of the presentation. And so you have two stages. You have stage one, which is the launching of the rocket, the creation of the trust. And then you have stage two, which is after the rocket has launched, after the trust has been created. Okay, so dealing with the launching of the rocket, or stage one, the firewall excludes the application of foreign law to certain key elements involved in the creation of the Bermuda Trust. So foreign law related to forced heirship, matrimonial claims or rights, or insolvency are excluded when it comes to key elements of the creation of the trust, such as the capacity of the settlor to settle assets into the trust, any right or interest to the property that's been settled into trust, the validity of the disposition of the assets into the trust, and any obligation of the liability, obligations or liabilities of a settlor, trustee, or beneficiary of a Bermuda law trust. So you get the rocket launched with the exclusion of these pieces of foreign legislation. Once it's launched and the trust has been created, you're into stage two. So any question related to the validity, construction, effect, or administration must be dealt with using Bermuda law. Okay, so rocket gets launched, and after that, Bermuda law applies. Now, naturally, you could have an onshore jurisdiction that says, hey, you're this Mickey Mouse little island, again, the Florida reference, Mickey Mouse little island with 64,000 people. We don't care what your laws say. We're just going to make this ruling, tribunal decision, an arbitrator decision. We're going to ignore your stage one and stage two. Then Section 11 of our Trust Special Provisions Act kicks in, and if they've got to come to Bermuda to enforce this decision, then the Bermuda courts say, no, I'm sorry, we're not going to give effect to your decision because you didn't apply Bermuda law. Now, naturally, the barristers who drafted this and charged us money for us tell us that it has certain advantages over other jurisdictions. I don't want to beat up on other jurisdictions. They claim it's the latest and greatest, and I'm sure if I went to their jurisdictions, they'd claim theirs was far better than ours. That's just the game we play. So that's kind of the firewall.
Thanks for that. That's very, very helpful. There's a question from Robert Mack, just asking, Robert Mack, Cayman lawyer, just asking, I'm always a bit concerned about migration of trust to Bermuda in order to implement amendments that would not be possible in the jurisdiction governing the trust. Is there not a risk that the exercise of trustees' powers to migrate the trust would be viewed as an ulterior purpose? I mean, how do you view that point?
Well, I'll give the lawyer answer that Robert will appreciate. It depends. It depends on how you do it, because typically as you're approaching one of these reorganization structures, it often isn't contentious, right? You're doing it because you want to extend the perpetuity period, or you want to, as Bernadette indicated, break it up into several chunks for different parts of the family, or you want to do a number of things that aren't necessarily contentious, but you can't achieve it efficiently using the laws of another jurisdiction, okay? And in those instances, which is the vast majority of them, moving the trust into Bermuda putting it under the laws of Bermuda and making the variation isn't something that's going to set people on fire, right? But maybe I'm getting my rocket analogies crossed up there. But in some instances, again, after the variation is done, they end up moving it back to the original jurisdiction, right? Because they now have the trust set up the way they want it. So yes, it might, if you're going to be doing it in an aggressive situation. Most of the time, it's not an issue.
Bernadette, do you have anything to add on to that from your perspective?
No, but I only just to say that I think Randall's 100% right, that it depends, and that, yeah, usually we're not talking in contentious circumstances and everything. The matters that I've been involved in, it's gone quite smoothly, thanks to the collaboration between Cayman and Bermudian lawyers.
Perfect.
Yeah, and what's interesting is Mr. Justice Caverly, or Chief Justice, as he was in Bermuda, has moved over to the Cayman bench, and we're starting to see the approaches that he adopted in Bermuda appear in Cayman, which I think is very beneficial for the development of the Cayman precedent. So it'll be interesting to see going forward. It was a shame we lost him, quite frankly, but anyhow.
Perfect. Well, thank you for that question, Robert. Please do keep your questions coming in, and we will bring them up to the panel as we move through. Randall, I mean, Bermuda's borders have remained open, and you've controlled COVID through aggressive kind of testing, making sure that keeping people on the island safe. Have you seen new businesses coming to the island, new people setting up new structures as a result of coming visiting the island, and innovation coming from there?
Yeah, it's worked out quite well. So about a year ago, July 1st, the airports reopened. So when it comes to social distancing, for most of our islands, it's pretty easy to do. You're in the middle of the ocean, you just close your airports and you're socially distanced from the world. What Bermuda did after they got their hands around this idea of the pandemic is they said, if we test aggressively, we're going to know what the situation is. And we're trying to avoid overwhelming our hospitals with positive cases. So there was Dr. Weldon, who was originally in the UK, came back in and put together a lab so we could do testing on island and all of that sort of thing. So we had aggressive testing. And on the 1st of July, 2020, we reopened the airport. And so the process was, you did a pre-test before you arrived in Bermuda, you did a test on arrival, you'd get your results typically in 24 hours or less. And after that, you were free to move about Bermuda as long as you complied with the local health laws, whatever they happened to be at that point in time. So what would happen is you'd have somebody who was resident in New York City, which was going through some rough times, and they said, well, I can sit in my condo in Manhattan and look at the walls, or I can go with my family to Bermuda and we can have sunshine, we can go to restaurants, maybe we have to eat on the patio, but we can still move around and interact with people, and we have a bit of a vacation, right? Tied in with that, a month after they opened the airport, they introduced something called the Digital Nomad certificate or program. It's got a fancier name, but I like Digital Nomad. And the idea was that if you had a university student or a business person or anybody who could carry on business remotely, as they would do from their home, they could do the same thing in Bermuda. So as long as they weren't taking a job in Bermuda, but they were continuing to work remotely, they could come into Bermuda and get a 1-year residency certificate that they could renew as they went forward. And there were, I don't know, there was some estimate that came out of the Minister of Labor saying there was in May 1,100 of these things approved. And you go, well, that doesn't sound like much. Well, that's 2% of the population in Bermuda. That's a pretty good bump, right? And typically these are high net worth individuals who are coming to take advantage of that. They also introduced an economic investment certificate policy that actually came into play before that, where people could go and invest $2.5 million either in a business in Bermuda, Bermuda stock of a company. They could give it away to a Bermuda charity or give it away to the government in the form of investing in their bonds. Well, they won't say that's a giveaway, but anyhow, they could invest in government bonds. And by doing that, they could get a residency certificate for 5 years. And again, subject to it being renewed going forward. So what we saw was it attracted both business people and high net worth individuals who often have multiple homes, saying, well, I got to be prepared for the next lockdown. And as we've seen with the variants coming in, things are locking down, but they look at Bermuda and it continues to remain open, right? And it's far nicer to be sitting on the beach in Bermuda than in your den in the middle of wherever it happens to be cold, raining, or snowing. So there we go. Yeah, it's attracted a lot of business.
Thank you for that. And you recently gave a presentation around statutory Hastings Bass and how this was applied by the Court of Bermuda in a trust setting. But part of your discussion was looking at the broader context. So perhaps you could share a flavour of that as an idea for the audience.
Yeah, I won't go into what Hastings Bass is all about, pit and halt, footer and footer, and what a statutory Hastings Bass is, which rolls it back pre-pit and halt and footer. This was a case that actually didn't really involve a trustee at all. It involved a decision of the board of directors of a Bermuda company to pay stock dividends. And this was a decision made in 1999, unreported case. So I'll be careful with names and such. Unreported case. And in 1999, they declared some stock dividends, which fast forward into 2018 or so, the revenue authorities in Canada say, hold on a second here. We think these stock dividends from 1999 attract taxation. And we're going to tax you tens of millions of dollars in taxes, interest, and penalties on these stock dividends that were made over 20 years ago. And they said, well, hold on a second here. There's got to be something wrong. And so they came to me and they said, what can we do? And I said, well, why don't we Hastings Bass it? Because when you read the legislation isn't particularly focused to a trustee, even though it appears in the Trustee Act. It deals with setting aside a exercise of a fiduciary power. And when the directors of a corporation exercise their discretion to issue a dividend, failing to take into consideration relevant factors like the taxation of it, then it's something that's capable of being set aside using the statutory Hastings Bass, which is what happened on notice to the revenue authorities in Canada, set that aside, and they were now in a position to strike a deal with CRA, Canada Revenue Agency, to reduce the amount of taxes. So even though it appeared in the Trustee Act, its application is in fact far broader than that, to the exercise of a fiduciary power. So it was quite fun.
So. Many thanks for that. If you have further questions for Randall or for Bernadette, pop them in the chat. I'll bring them back on to comment. But I'm going to move on now to Reuben Anstock from Newhaven Group in BVI. Welcome, Reuben.
Thank you, David. Good morning, good afternoon, and good evening to our guests. I know you usually attract a diverse range of guests across a number of territories. Thank you for having me. It's a pleasure to be here. Speaking personally, it's great to see a little bit of normality returning to people's lives. Good to see Randall's made it up to Miami on holiday. Good to see some sport back on the TV as well. We've got Wimbledon coming up, which will be exciting, and the European Championships with some attendance. So fingers crossed, we're on the right trajectory now, and on the way out of COVID.
Good to be chatting to you today. We heard from Bernadette about cryptocurrency being a part of now things that trustees have to deal with, either wealth creation or wealth structuring. How do you see the crypto coming into your business?
Yeah, from a BVI perspective, I moved here with my family last December, and I was absolutely amazed to see how much BVI and the practitioners here are punching above their weight in the crypto industry. I mean, just to give you a couple of stats, actually. They're a little bit dated now, but provide a fairly good barometer of performance of BVI in this sector, where BVI was actually third on the international list of ICO launches by funds raised recently, a total of 71 ICOs and $2.4 billion worth of funds raised. And that's second only to USA and Singapore. I hear Bernadette earlier in the call say that they're seeing a sort of a real uptick in this type of work in Cayman as well, and that's reflected on the league table I see here with Cayman there as well. So, for small islands really punching above their weight. We've got a couple of big names registered here which help that. We've got Bitfinex, which claims to be the home of digital asset trading. We've got Tether, which converts cash into digital currency to anchor or tether the value of the price of national currencies like the US dollar, the euro, and the offshore Chinese yuan. I think anecdotally speaking, and again, referencing Bernadette, I spoke to a major offshore lawyer here the other day, and he said 70% of his new business was crypto related. I can't say too much for obvious reasons, but just yesterday we received a new inquiry in relation to a crypto token business where famous artists will be contributing assets to the chain in a Live Aid type fundraising initiative to help impoverished children. So some really sort of interesting stuff happening in the space here. I thought it'd be useful actually to just touch on why BVI seems to be doing so well in this sector. And I think it really comes down to three factors, or three key factors. There's a niche expertise here with high levels of engagement. There's a constructive regulator, and there's an appealing product suite. So if we look at each of those separately, in terms of niche expertise, we've got engaged stakeholders across legal, fiduciary, accounting, and banking sectors. And there's a real buzz around this industry sector. So we've got professionals that understand the law and the regulations surrounding blockchain and digital assets, but also the underlying technology, which is really important. The Crypto Curry Club has been formed here, which is an informal group set up to discuss crypto and blockchain technology over a curry and a beer, as the title suggests. That's increasingly well attended. And I think that's all helped and amplified by a successful hedge fund that's set up here that's just delivered an amazing return over the last couple of years. It's invested purely in crypto, run by two extremely passionate guys who've also both relocated their families here to BVI. So there's a huge depth of expertise here. We've got a great regulator, a very constructive regulator who recognises the importance of crypto and digital assets in the future of the financial services industry. And as many of our listeners will know, I think it's figures of up to 70% of GDP in BVI is driven by the financial services industry, which underlies its importance. Generally speaking, the regulator's not trying to impose regulation on virtual assets that would not otherwise be subject to licensing under the mainstream financial services regulatory framework here. And we've got a regulator that's actively trying to foster a culture of innovation. So late last year, we had the financial services fintech regulatory sandbox regulations come into force. And under those, BVI companies and other undertakings are able to test fintech and relevant financial services products on a trial basis within a light touch regulatory environment. We've also had the Digital Assets Working Group, which is started by BVI Finance here. It's a combination of lawyers, hedge funds, Financial Service Commission reps, BVI Finance, who effectively brainstorm what can be done in BVI with respect to digital assets. So we've got a broadly skilled task force from reg to front office to ascertain how BVI can help optimize the digital asset business.
Sounds very exciting. I mean, it sounds hugely exciting and a source of innovation and new business in these difficult times. So no, that's great. Thank you for that. And in terms of switching tack, just talking on generally around economic substance, requirements on economic substance, how are you seeing that on the ground affecting the way that trustees and administrators, corporate service providers run their business?
Yeah, I mean, I'll assume for these purposes that everyone on this call is familiar with the economic substance regulations that we're all subject to and the genesis of those. Just as a quick recap, broadly speaking, the requirements necessitate a series of questions to be asked. So we have to ask, does the client have any relevant activities? If yes, for each financial period, do they carry out one or more relevant activities? If yes, do they earn income from such relevant activity, and are any relevant activities tax resident elsewhere, or could any relevant activities elect to be so tax resident? The relevant activities of banking, distribution and service centre, financing, fund management headquarters, holding, insurance, intellectual property and shipping business. We're now in, actually today is the end of the second reporting period for legacy companies. So in terms of how this is impacting business, industry data shows us that incorporations in BVI continue to be on the decline, although there can be other contributing factors to that. However, our data internally shows us that 99% of our entities are either out of scope or pure economic holding entities. So what we've seen there is, in terms of out of scope entities, there's not really any action required apart from having to classify the entities and make a filing within the applicable registry here. With respect to the pure economic holding companies, there's a lower threshold requirement to have adequate employees and premises. We've created a product called the Investment Administration Services product, which means we provide people to manage those equity participations. And this seems to be particularly resonant with clients. And then in terms of other relevant activities, I think it's important to note that 0 employees can be an adequate number of staff. So where the business is being conducted without specifically employing staff or premises, we've been appointed to boards of entities to ensure direction and management and core income generating activities are performed from here in BVI. It's obviously very important, if you are a trustee or provide directors to a structure, to ensure careful analysis of the facts and compliance with the legislation. We're just starting to see significant fines for non-compliance coming through from the ITA. And those can, for persistent non-compliance, those can escalate into the hundreds of thousands of dollars for high-risk IP offenders. So very important for us in the fiduciary sector to get on top of that. I think as a general proposition, and again, this is supported by peer data, we're seeing the number of new companies in the territory decline, but we're seeing increasing renewal rates all the time and higher levels of service provision to those cohort of companies.
Okay, thanks. And BVI has looked to Asia for a lot of its clients and business over the years. Are you noticing any trends out of Hong Kong or PRC in terms of wealth structuring, changing needs of the client base, changing tastes at all?
Asian corporate structuring still dominates our business. In fact, our biggest office is in Hong Kong. We did see a decline in business in 2020 across our business and speaking to peers in other businesses, but that which was driven by COVID, but which seems to have bounced back already in 2021. And BVI continues to be the first choice for private investment holding vehicles in Asia. I think on the trust side, anecdotally, we continue to see the rise of private wealth in the region, but there does seem to be an increasing amount of asset value held by Hong Kong law trusts versus offshore trusts, which aligns with an industry trend we're generally seeing in terms of migration from offshore to midshore and onshore territories. That said, there's still a huge trust opportunity baked in here in the BVI by virtue of a number of companies which remain personally held by Asian high net worths. As our audience will know, there are a number of pitfalls to owning a BVI company's shares personally. Foremost, the application to the BVI courts is required to process grant of probate or grant of letters of administration, which leads to a number of undesirable outcomes. So in terms of time and cost, the process typically took 3 to 6 months before we had the COVID delays occurring in the courts. There's unwanted publicity as personal details of owners and successors of companies become public knowledge. Frozen accounts possible as assets and cash cannot be distributed until the process is complete. And also, particularly in respect of Middle Eastern clients, unintended recipients, as BVI law requires distribution in accordance with the shareholders' local laws. We see a lot of Asian clients who continue to rely on nominee or bare trust arrangements, which our audience will know don't work as they automatically terminate on the death of the shareholder. So, I mean, just putting all of that together, we're seeing an increased understanding of these issues, and particularly in light of the COVID pandemic, people reappraising their personal circumstances to ensure adequate succession planning and asset protection arrangements are in place. They tend to use the typical structures, so trusts. Asian clients particularly like the Vista trusts, which allow for disengagement of the trustee from the underlying business. But we're seeing some more innovative solutions appeal to clients. So joint tenancy shareholdings, for example, where there are arrangements where the patriarch holds the shares as part of a joint tenancy with his wife and children, so that in the event of the untimely passing of one of the elder generation, the ownership of the company immediately passes to the remaining members of the family in equal shares. And then we're seeing more bespoke M&As where different types of share classes are provided, often referred to as alphabet shares, which give different levels of control over company decisions and varying rights to receive dividends and entitlements to the capital of the company. So broadly speaking, separating out economic and control interests. And for those of our listeners in the UK, this is very similar to family investment companies over there.
Okay, thanks for that. And we heard from Bernadette at the start about the changing priorities of clients, more interested in ESG and sustainable investing. We're going to bring Louie French on in a second to talk about sustainable investment strategies. But what's your perspective on how trustees particularly should be advancing this agenda or engaging on this topic with clients? What's your view on that?
Well, I think it's absolutely paramount for trustees to be engaging these conversations with their clients. I think from our perspective, whilst it's very topical and part of the current zeitgeist, ESG is sort of fairly nascent in its development, and there's still a little bit of inbuilt skepticism, especially with regards to sort of ESG, like stamps of approval and the veracity of those. I think what we're seeing is, particularly for the next gen, it's about ESG type of impact investment that can be made through private equity, private positions themselves, or setting up their own fund. I think high net worths want it to be part of their epitaph that they change the world for the better. Dare I say, it's better for the ego to have done something distinct and remarkable as opposed to investing in a fund with a dubious ESG stamp of approval. So I think we're encouraging sort of wariness around those stamps of approval. That said, I've just this week finished setting up a fund for a client that makes specific targeted investments into companies which are there to solve the climate crisis. So, it's very topical and people are engaging in this sector. I think just to close this point off, David, interested in the older cohort of our client base, I've been privy to more discussions around commercial opportunities arising out of the COVID crisis. So we've seen particularly people increasing positions and stakes in entertainment and travel companies last year. So, I've one client who's 71% up on a major investment in a household entertainment company. Seen clients looking at real estate opportunities in the UK and then clients looking particularly at vaccine development and distribution. So yes, ESG is part of the conversation, but there's lots of other matters that clients are interested in at the moment as well, given the current state of the world.
Terrific. Well, thank you so much for that, Reuben. I'm just going to bring on Louie French, now sustainable investment expert at Tilney in London. Welcome, Louie.
Good afternoon, David, and hello, everyone. And I join you from a bit miserable and nervous London ahead of the England versus Germany soccer match tonight, or football match.
So we heard from Reuben there how he sees the development of this market, and still being nascent in a sense. There's more copy written about it. There's more discussion. It's certainly on the investment agenda. What's your read on where we're at in terms of the development of this conversation? And are we indeed at a tipping point where this should just be part of every investment strategy, should have an element of the principles that you might manage these portfolios as? What's your view on that?
Yeah, I completely recognise what Reuben was saying, particularly around some of the caution on ESG ratings, for example, where, there's a lot of growth and there's a lot of kind of evolution that needs to be, happening across, data and the underlying company's disclosures. So we are also slightly cautious on particularly the passive area of the ESG market because of some of these issues around ESG data. But I do believe we are at that tipping point now. And particularly, I think this is, increasingly a global tipping point as the rest of the world does play catch up with the European and UK when it comes to sustainable investing becoming mainstream. And I would highlight really four main reasons why I believe that sustainable investing really can no longer be ignored. Firstly, kind of growing demand to do good with savings, and that aligned to various other comments already today about the growing consumer focus on ESG and sustainability across all aspects of our kind of daily lives. Secondly, I would highlight kind of businesses looking to future-proof their revenues, particularly with that younger generation that are looking increasingly at sustainability and ESG. Thirdly, I would highlight the increasing regulatory focus on ESG, and I'll touch on that in a moment in a bit more detail. And then lastly, the market performance of ESG and sustainable funds, and also that greener economic recovery from the pandemic. And if I just dive into each one of those, if you allow me to, that I think, yeah, brilliant. So firstly, on the kind of growing interest and demand from clients to do good with their savings, and it's very clear from various market studies that investors are increasingly looking to align their savings with both their personal and political beliefs. And this is something, like I said, that has grown significantly during the pandemic, as greater focus on health and well-being. Often we refer to it as the Attenborough effect, so obviously linked to the world famous broadcaster Sir David Attenborough, whose documentaries such as Blue Planet have really shone a spotlight on sustainability challenges such as plastic pollution, deforestation, and climate change. But increasingly, advisors and trustees will kind of have their own experiences of what the demand looks like. But just to give you some data and some snippets from the market, and Calistone recently released a report which estimated that ESG funds have took in approximately $84 out of every net $100 flows into equity funds in the last 2 years. And Morningstar now estimate that the global ESG kind of fund assets universe is now approximately over $1.6 trillion. So this really is no longer a niche area of the market. And like I said, it's growing, and we're certainly experiencing that growth with our own kind of funds here at Tilney Smith Williamson. And as highlighted already on the call, the second point around future-proofing your business, we do believe that trustees do need to be prepared to talk to younger clients about sustainable investing and ESG. For example, and there's a number of studies out there in the market, again, in the UK kind of advisory market, we estimate that approximately £1 trillion are set to move between generations of families. And a lot of studies highlight that actually younger clients don't always take on their parents' advisors. And we highlight to our advisory market, actually, you need to be prepared as one of your ways of trying to retain clients, the ability to talk about issues and subjects that might be uncomfortable to you personally, but actually are where younger investors are very much focused at the moment. And this is particularly, like I said, if you look at the kind of growth, particularly in Europe, particularly in politics alone, in the growth of kind of greener parties and more mainstream established parties such as the Conservative Party here in the UK, looking to kind of reposition themselves as being more green friendly, and we see that kind of political kind of surge continue with new policies ahead of COP26 in Glasgow in November this year. So we're expecting this kind of political movement linked to kind of growing interest from residents to continue, and that will continue pushing into the savings and investment world. And then onto the kind of the regulatory kind of environment and what we see coming through here. And it's quite interesting when you look at the number of ESG regulatory kind of, and we've heard today from different people, there are different aspects of where this kind of goes. But from an investment perspective, in the investment world, we estimate since 2018 there have been over 170 ESG related regulatory measures proposed, which is more than the previous 6 years combined. So this is significant growth in the regulator focusing on ESG from the investment perspective. And a number of these kind of policies are still being finalised, particularly if you consider in the UK kind of what MiFID II looks like in a post-Brexit world, and how the UK implements some of the measures that the European Union have already. For our own business at Tilney Smith Williamson, our European mandates now have to be signed up to the Sustainable Financial Disclosure Regulations. We have a new EU taxonomy coming in for asset managers. And the UK and the FCA are, very much looking at kind of the task force for climate-related disclosures, so the TCFD. And we just see that growth kind of happening globally. And I know in previous conversations with Randall, he's highlighted some other movements in the US, getting a hold of this ESG. And it's really to both promote sustainability and to tackle some of the issues of greenwashing across the market, which is a big problem for all of us. And then lastly, just on the performance of sustainable investments and this greener economic recovery, which are linked to all the other three themes I've highlighted. Our key philosophy, investment philosophy at Tilney Smith Williamson for our sustainable mandates is very much focused on kind of profiting and benefiting from the transition to a more sustainable economy and the legally binding net zero targets that are increasing. We see this as being an attractive place to be in the market, and for our clients, it's been a profitable place to be. So, just to give an example, our kind of sustainable model portfolio service, which has a number of portfolios, on a risk-adjusted basis, from more conservative to adventurous clients, significantly outperformed the wider universe and our kind of peers in the shorter term and the longer term, going back to our longer 10-year track record. And annualized returns, we've been producing returns of 5.5% to 10.5% annualized across these portfolios. So just to highlight that point, because like I said, there is a little bit of caution still amongst other investors that you might have to give up returns to invest sustainably or do good with savings. I think our portfolios highlight that's no longer the case.
Thanks. And how would you work with trustees looking at a new sustainably focused portfolio within a structure? Is it about establishing the nuances and priorities of that client and then building from bottom up your approach? How do you go about constructing something new with a fiduciary client?
Yeah, that's a really good point, David. So clients come at this from different angles and they have different demands and they're on a different journey at times that maybe just starting out, or they've got more experience in sustainable kind of investing for their clients. At Tilney we can build bespoke models and we can offer bespoke relationships for clients subject to their needs. And obviously, like I said, we have the centralized managed portfolio service that I kind of manage, which offers these models that clients can just drop straight into, subject to whatever their needs are, being aimed at quite a mainstream audience. And as part of that service, we offer kind of ongoing face-to-face time, as well as kind of specialized guides and services that allows them to interact with their kind of clients on a more personal basis. And I know a number of clients, for example, have asked for kind of white labeled kind of guides and fact sheets and stuff like that from our kind of specialist investors. So, we've got a number of colleagues that I'm sure are more than happy after today's call to speak to anyone out there that's kind of interested in sustainable investing. Depending on where you are on that journey, I'm sure we can help if you want us to.
Perfect. Well, thank you for that, Louie. We've just got time for one more question. We've got a question in from Martha Rantahal. Thank you, Martha, for your question. It's asking across the panel, what are your thoughts on possibility of new global tax regulation and the possible implications for the industry? Perhaps, Bernadette, if I come to you first on that, what's your take on how global taxes can affect the industry that we're in?
Yeah, I mean, if we're talking about the news just out recently, I think from the Cayman Islands perspective, we are not too worried about it. As you know, we weather storms like this relatively regularly. And based on the information we know about what's intended behind the global tax that's in the news at the moment, we don't think it will, or we think it will capture only a very, very small part of our client base on the island here. So it's very much a watch and see approach being taken by us at this end, on this island, and business as usual in the meantime. I don't know what others have to say.
Randall, do you have a perspective on the global tax initiatives that we've been seeing recently reported?
Well, living in Bermuda, tax is bad. No, the general view is that in Bermuda, the bulk of our business is insurance related. And the insurance companies have looked at global minimum taxes for years. And their view is that it will not impact them to any great extent. It depends on ultimately how these things come into play and how the regulation is actually written. But for example, an insurance company that's headquartered in Bermuda and carries on business in Bermuda, even though its insurance base may be global, in the view of some of the analysts, this will not impact them at all. Also, some of the insurance companies that are carrying on business voluntarily pay tax in jurisdictions. So when they look at the differential in what they're actually paying versus this perhaps 15% minimum global tax rate, it's not enough to actually cause them to do anything. The reason a lot of these insurance companies are based in Bermuda is because of the concentration of expertise. The same concentration you get in Cayman as it relates to funds, in BVI as it relates to corporate and other structuring. It's that concentration of talent. And that's not going to change with a global minimum tax.
Okay, thanks. Reuben, do you have a view on this question?
Yeah, I mean, just to second what Bernadette and Randall have both said, we have a fairly sanguine outlook here. actually, and as Randall says, the devil will be in the detail. There's a tide of opinion that says that actually these measures are really designed to trap the big technology and finance companies that have got subsidiaries in other parts of Europe, and particular Luxembourg and Ireland and places like that. So I don't think it's actually the Caribbean jurisdictions that are in the crosshairs here. Ultimately, we'll see how things get drafted, but we're relatively positive.
Okay, well, many thanks. We are out of time today. Thank you to our panel for offering up such terrific insight. Thank you to Tilney, Smith and Williamson, to Louie and to Craig for sharing some thoughts with us as well. And I hope we can follow up and do some business together across these jurisdictions. So thank you for joining us today, and I wish you